a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about financial ETFs. So financial ETFs actually don't get a lot of attention, but financials is the second best performing sector year to date, only after energy. It is up about 38% this year. And we know that third quarter earnings season started on a very strong note, and most big banks, they reported excellent earnings, and their capital markets divisions in particular did very well, and that is mainly because of this surge in deal making, the merger mania that we have seen, and also the surge in trading. So trading boom and merger mania that aided capital markets business. And consumer spending is also rising. We know that people have a lot of cash, consumers have a lot of cash saved from their lockdown days, and they are spending that. So that helps the credit card businesses. Loan growth is also picking up, but slowly. Now, we know that interest rates have been rising since the Fed indicated that it may start tapering its bond purchase programs in November, and then it may also raise rates next year. So higher rates, they benefit banks and regional banks in particular. So rising rates benefited regional banks. Now, economic growth is also expected to pick up once all these temporary issues like labor shortages and especially supply chain disruptions, they are resolved. So a rising economy and higher interest rates, they will benefit banks, regional banks in particular. And if we look at the valuations, we know that banks have done very well this year, financials have done very well this year, but even then their valuations look attractive compared to the broader market because performance was lackluster for the past so many years. We'll take a look at three financials ETFs that provide very different kind of exposure. So the first one I'm highlighting, it's the most popular financial ETF. It provides broad exposure to the entire sector. It has more than 45 billion in assets, as I mentioned, the most popular one, and also one of the cheapest with an expense ratio of just 12 basis points. It follows a market cap weighting scheme, so it will be top weighted a little bit. Now, to learn more about this ETF, you can go to the quote page. You can read our research report, articles, and then use the link to go to the State Street webpage for this ETF and learn more what it holds. So it holds, banks, capital markets, diversified financial services, and as well as insurance and consumer finance companies. So as I mentioned, that this provides broad exposure to the entire sector. Now, looking at the top holdings, Warren Buffett's Berkshire Hathaway is the top holding with almost 12% weight. And then you will see JP Morgan Chase, Bank of America, Wells Fargo, Morgan Stanley. You will see that top three companies account for almost 30% of the weight. In fact, more than 30% of the weight in the portfolio. Now, the second one that I'm highlighting is the one that focuses more on investment services providers, the broker dealers and exchanges. So if you believe that capital market activities and the trading activity is it's going to stay at elevated levels, then probably you need to take a look at the ETF. This has an expense ratio of 41 basis points and has 997 million in assets. Again, to learn more, you can go to the quote page on Zacks.com, and from there you can go to the external home page, the iShares web page for this ETF and learn more about what it holds. It has a rather concentrated portfolio of just 25 holdings, broker, dealer, and exchanges. So you will see companies like Morgan Stanley, Goldman Sachs. So again, the top two holdings, because of market cap weighting, they occupy more than 40% weight in the portfolio. And then you will see companies like LPL Finance, CME Group, exchanges, and other exchange like Continental, CBOE, Nasdaq, etc. Now, third one that I'm highlighting is a regional bank ETF. And as I mentioned, regional banks will benefit more if interest rates rise and economy picks up. So because interest rate margin is the bread and butter for regional banks. So they do well when interest rates start rising. And we have seen that interest rates have been rising. If they continue to rise, then the ETF will benefit. This follows an equal weighting scheme. And this is also quite popular, 5.5 billion in assets, an expense ratio of 35 basis points. Again, to learn more, you can go to the quote page. Has a nice dividend yield also of 1.9%. And then you can go to State Street web page for this ETF and look at top holdings and other details. So because it follows an equal weighting scheme, you will not see a lot of exposure in the top holdings. This gets equally weighted at every rebalancing, but you will see some of the well-known banks like Regional Bank, Comerica, Key Corp, Signature Bank, East West Bank Corp. And in full disclosure, I own this ETF in the ETF investor portfolio that I manage. On the last slide, I have the comparative performance versus the S&P 500 index. You will see that IAI and KRE, the broker-dealer and the regional bank ETF, they are up about 75% in the past 1 year. The broader ETF XLF is up about 65%, and whereas the S&P 500 index is up about 33% over the past year.
Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.